Yeah, so let's analyze now the rest of the section that we. So we were focusing the agriculture performance and the policies undertaken during 1980s 1990s. So we will continue with that. One more so the reference articles remains the same. So I have just mentioned, and this will continue from the previous lecture that we have. So we are now continuing from the previous lecture. So in 1980s 1990s, one more consideration was given was the how we can tackle the risk and uncertainty, and how we can minimize the risk and uncertainty in the agriculture sector. And because of that, there were certain measures were undertaken at that time, and it was about crop insurance. And why it was required? Because at that point of time, most of the farming community is had a tough time in terms of dealing with severe drought. Then we had natural calamities, and in those cases most of the farmers had no avenues to at least have some economic relief. And that's why at that time there was a comprehensive crop insurance scheme launched. It was some kind of pilot program just to see the response from the farming community to manage the risk in agriculture sector caused by the natural crash, earthquake, or any kind of flood, or in terms of calamities. The CCIS was also implemented to improve the production of desired commodities, in especially in the areas of where you have the chances of having some kind of either that area experiences the flood, or there is some chances of having a severe drought. So it was also meant to have some kind of focus on the food grains, pulses, oilseed. The scheme covered rice, wheat, millets, oilseed and pulses. And it was voluntary in nature because it was not told to state to implement these schemes, and even the farmers had the option to opt or not to opt. And that's why it was also left to the states to implement it. The sum insured per farmer was 150% of loan dispersed for growing crops. So this particular scheme, one major, or I would say, clause was that only the loanees, if you have taken the loan from the bank and for agriculture purposes, then you can opt for this particular scheme, because this was the pilot program. So it was only given to those farmers who were the loanee from the banks, and the sum insured covered only the loan amount. So in the beginning it was a good response, and that's why it was it continued again, and then government had to formulate a proper regulatory body to deal with it. So comprehensive crop scheme was one of the major successes at that point of time. Then we analyze the agriculture policies 2000 to present. And National Agriculture Policy NAP 2000 was announced. The target was that agriculture should have the growth rate of 4%, and at that time, since the economy was also doing good in terms of growth or development, and post 2000 it has been a good scenarios for the economy, except 2007, 8 and 9, when we had to experience the global financial crisis and the adverse impact of global financial crisis. Otherwise, the business cycle in most of the periods it was above normal. So that's why it was also decided that there should be some kind of transfer of wealth from the booming economy to the agriculture sector. So there was overall effort to revive the agriculture sector, and this was the target set was 4% per annum based on the conservations of soil, water, biodiversity. So there was whole lot of effort to not just think about the food production, to also think in terms of agriculture sustainability, that how we can sustain our food chain, how agriculture growth, high agriculture growth equity, to utilize the barren and wasteland for cultivation and afforestation. And then we had then the government had also promoted the multi-cropping pattern, so that the intensity of agriculture farming should go up. And this was also designed. There were also intercropping pattern, because conventionally in India most of the farming community used to be active during Kharif season, starting mostly in the rainy period, but during Rabi season only some pockets of the country used to be active. So, there was a whole lot of plan to expand the irrigated areas, irrigation facilities, and as a result it was decided that there should be promotion of multi cropping or intercropping. To enhance the investment in agriculture, private sectors was also allowed and they were given incentives to participate. Promotion of modern practices through application of new technology, especially in terms of horticulture, and there was a different set of technological enhancement in each and every field of the agriculture sector. It was also at that point of time Hong Kong ministerial meeting of WTO had put some kind of restriction on the or some kind of quota restriction on the agriculture produce, especially agriculture trade. So, at that time it was decided that there should be a domestic some kind of production or domestic support effort coming from the government, so that the farming community does not get affected from these regulations. So, at that time this was the plan. Then National Agriculture Policy also launched something called National Agriculture Insurance Scheme, and this scheme helped a lot in terms of providing incentives to farmer to minimize the uncertainties and the adversities in the agriculture sector. NAP also focused on the national livestock breeding, just to have more focus on the domestic livestock, different breeds, so that it can help in terms of augmentation of different associated sectors, because livestock has both forward and backward linkages to the agriculture. So, now we will be focusing on the insurance part, because this part is one area which we hardly have the understanding about, and in agriculture sector if you read textbook, then you find that they more focus on the planning process and the developmental tasks that we had adopted at that time, but they hardly have any dedicated platform or dedicated chapter for the national agriculture insurance policy. So, this National Agriculture Insurance Policy was launched in 1999-2000, replacing CCIS that we just discussed. And for smoother implementation, there was a setting up a body, Agriculture Insurance Company of India Limited, AICIL, and it was incorporated in December 2002, just to make sure that National Agriculture Insurance Policy gets implemented quite efficiently. The scheme covered all loanees, non-loanees, sharecroppers, tenant farmers for all food crops and oil seeds. So, it included all the natural and non-preventive risk. So, there was a whole lot of effort, because CCIS response was really good, and that is why under NAIS government walked an extra mile just to give more confidence to the farming community that their risk is somewhat minimized. The scheme was implemented across 16 states and UTs in 99-2000, and at present it is also operational, but now most of these schemes are merged with different schemes. So, that will be taking up. So, overall what comes out that we had the beginning of agriculture insurance, and this continued, and by 99-2000 we had a proper regulatory body, Agriculture Insurance Company of India Limited, to take care of this part. So, government also wanted that this particular scheme should be taking lead, because in India the farmers seem to be completely unprotected of their risk. Then in 2016 the launch of Pradhan Mantri Fasal Bima Yojana, and this was launched in 2016, and this scheme replaced the previous scheme, because the previous scheme was merged into this. So, it happens in most of the cases that whenever a new government comes, then they always try to modify certain policies for the good of the people, and they add value to that. The scheme has the uniform premium. So, unlike earlier where it was left to the farmer to participate, but under this scheme the farmers are supposed to pay 1.5%, 2% and 5% of the for Kharif, Rabi and horticulture seasons, and once they pay 1.5%, 2% and 5% premiums, and then and it was decided that based on the farmer has to pay only 1.5 2%, 5%, rest of the amount will be paid by the government. The sum insured under this scheme was fixed to 39,000, and in the beginning when this particular program was launched, it was a great success because the enrollment rate was really high, and it was also reported in media and all other places that this particular scheme is seeking the attention of people. But because of the late recovery or late because of the bureaucratic hurdles, this particular scheme is again has become one of the controversial subject. But the intention is that farmers will also be contributing a minimal amount in the premium, and rest of the amount will be paid by the government, and the benefit has also gone up to 39,000 per hectare. So, in terms of, and then in 2002 again I forgot to mention this, then there is a setting up of Agriculture Insurance Corporation. It was set up in 2002, and it has the major share coming from GIC, General Insurance Corporation. NABARD has the most important share, and rest of the 4 insurance companies have the limited share, and it is 50% owned by the it is completely owned by the government, but the major share comes from the NABARD and GIC. So, AIC is completely owned by NABARD and the General Insurance Corporation of India. In Pradhan Mantri Fasal Bima Yojana, these schemes are also merged, and that is why I thought I should be mentioning. So, this particular scheme is having importance in terms of not only understanding that how the coverage of the insurance schemes are now taking forward, it has gone to even the sub-component level. For example, you will find that modified national agriculture insurance program, then weather based crop insurance program where we have a rainfall. So, there you have a rainfall, and then there is also a scheme for coconut palm insurance. It was implemented in certain part of the southern states, and it has been successful, but later it has been merged to Pradhan Mantri Fasal Bima Yojana. We will now examine certain, so insurance sector we come to know that how government has taken care. Now there is a whole lot of effort to revive this particular sector and find out how we can think about going ahead and not just thinking about produce, but also taking care the interest of the farming community and how they can minimize certain risk attached with the agriculture. National Seed Policy 2002 was launched, and for the first time, unlike earlier schemes that we discussed, we had we encouraged the private sector participation, and as a result what has happened that the share of private sector in seeds production has gone up. Now it is more than 50%, and that is good because there is a widespread promotion of innovations and collaboration in private sector. Government institutions became rigid after some point of time, and that is why it has not been a great success, and that is why private players have overtaken. Then there is a National Horticulture Mission. So, unlike the earlier schemes where we were simply focusing only on the food on the coarse grains and pulses, there is a whole lot of effort made in 2005 to launch the National Horticulture Mission. It is called NHM. The sector was given priority, and it was given in the 9th plan. It went up to 2000 crore, though in the 8th plan it was just 1000 crore given, and it has contributed a lot in terms of export of certain items, mostly mango, banana, coconut, cashew nut, then ginger, turmeric, black pepper. So, all these items are being exported, and in certain areas it has helped a lot, this particular mission. Then one important mission that led to the midday meal program, and then we had the National Food Security Act, and this particular scheme gave rise to a certain level of developments in the agriculture. So, we started focusing on redistribution, how to capture those who are hungry. So, National Food Security Mission was launched on May 29, 2007. A resolution was adopted by launch to launch the food security mission comprising rice, wheat and pulses, and it was decided that during 11th 5-year plan, by the end of 11th 5-year plan, it was decided that rice, wheat and pulses production will increase by 10, 8 and 2 million tons respectively. The beneficiaries, the plan was designed in such a manner that even marginal small farmers were given importance, and at the same time the local governing bodies also had a role. So, Panchayati Raj institutions played a role in implementation, and that is why this particular National Food Security Mission is considered important, because it focused objectively on increasing the production of certain food items. And later the National Food Security Act 2013 had the effect of this particular policy, NFSM, and that is why it became one of the major contributors for the food sustainability and even the self reliance in food production in the country. Now, we will move to agriculture credit. We have already discussed the role of regional rural banks. Then we have the NABARD, it was set up in 1982. Then self help group, we have already discussed that in 1992 how it became one of the major drive for the rural employment and rural well being. And in certain part of Kerala and other states, it became important. For instance, Kudumbushri is one scheme. Under that, certain pockets in Kerala are getting benefited, and that is why the effort made in 1992 has started giving positive results in different forms. So, through microfinance institutions, through self-help groups are one of the major drivers of self-employment in rural segments. Even in agriculture, it has contributed a lot. If we trace the history, so we have there is always talk about loan waiver program. So, whenever we have elections happening across the country, in certain states, governments always, political parties always come up with certain kind of riders that once they come back in power, they will be giving loan waivers to farmers. For the first time, if you trace the history, first time the nationwide loan waiver scheme was implemented in 1990. With the amount of rupees 100 billion. So, at that time 1990 we already had economic crisis, and at that time government had gone for such measures. In 1995 Rural Infrastructure Development Fund was launched by NABARD to fund the rural infrastructure project, and this project was meant to it was meant for the state local bodies to seek fund from NABARD and help create the rural development or undertake the rural development projects, and the rates were quite lower on this, and this also helped a lot in terms of going for certain enhancement in agriculture productivity. There was one major development in 1988 which had a major contribution, though we are discussing 2000 to present, but I am just highlighting it. Here it is Kisan Credit Card, this is called KCC. This is also one of the major contributors in going for or in expanding the agriculture credit scenarios, because this provides immediate help to farmer if they are seeking any kind of financial assistance during Kharif or Rabi season. They can simply go to the bank and then they can ask for they can ask for some financial help. So, this was for the first time we had launched in 1988. It was some kind of giving financial security in a hassle free manner to the farmer. So, agriculture credit, if you trace the history from 1950-51, so agri credit to agri GDP jumped from 0.6% in 1950-51 to 9.181% in 1970-72, and at that time certain non-institutional modes of credit financing were also operational, and that is why the ability of credit from the formal channel was much lower. The ratio reached to 21.76% in 1987-88 when we had the launch of RRBs in terms of credit flows. Once we had gone for setting up our RRBs, and we had also gone for nationalization of bank. In 1990s it had gone back because we had the economic crisis at that time. Post 1999 we see a major upward movement, and the figure had reached up to 40% in about 40% in 2006-07. The major reason for this jump 39.55 was the introduction of KCC, Kisan Credit Card, because this helped immediately getting money from the banks, and farmers also, the farming community was quite happy with this. And then after that we have a very smooth ride in terms of credit availability, because then we already had the institutions to take care. If you look back, I have taken it from the Rakesh Mohan article, and it is available online also, Agri-Credit Bulletin. It is on the RBI website also. So you will find that the agricultural credit system works in this way. So here you have a NABARD, then here you have the commercial banks, then you have the rural cooperative banks, and then here you have the regional rural banks. Rural cooperative banks play a very important role. Here you have the long term credit, and here you have the short term credit. Short term credit are for less than 15 months, long term credits are for 5 years. So you will find that state cooperative agriculture and rural development banks play a role for long term credit. For primary cooperative agriculture and rural development banks play a role in this. So here it moves in this. So if you go from here, so depositors and borrowers will have money, they will be approaching to these institutions. These institutions, if they need, they will be approaching. For example, primary agriculture credit society will be approaching to district central cooperative banks. Then for anything, this will be approaching to a state cooperative bank, and this goes on. So this particular chain that you have, it works for the short term. For long term, again it works in this way. The idea behind this was that it should give, so primary agriculture credit societies are available at the village level, then district level, and further it goes on. So then at a state level, so primary agriculture societies are important because they provide the short term loan to the farming community. Under this, any borrower and depositor come, and deposit from anyone can be accepted, there is no issue, but it is managed by based on borrowing and deposits. If deposit is higher, borrowing is less, most of these primary agriculture credit societies will be profitable. If the borrowing is more, and if they are in shortage of fund, they will approach to district central cooperative bank. So it works in this way, right. So here now I have also given you some kind of idea about what happened at that time. So I have again taken it from the Rakesh Mohan paper. So here it comes out that in case of non-institutional in 1951, the money lenders had the share of 69.7%, that got down by 1991 to 17.5% because of the certain measures that we took, and because of nationalization of bank, setting up of the rural development bank, then we had further allowed the self-help group. So the role of money lenders came down heavily, and the institutional increased from 7.3 to 66.3. So this is one contribution. This I have taken it from, I have calculated it from the database on Indian economy on Reserve Bank of India. You will find that there are three major contributors to the agriculture credit. One is cooperatives, then you have scheduled commercial banks, then you have regional rural banks. You will find that the cooperative share was higher in 1979-80, 60.3. In 2018-19, it is just 13%. Similarly, the share of scheduled commercial banks, it was earlier 1979-80, it was just 37. It has gone up 2018-19 to 72.6%. In the same way, you will find also the share of RRB, which means that the role of commercial bank has gone up, means the government banks. The regional rural banks have also gone up. There is slight decline in the cooperatives, and cooperatives because they are subject to state governments, and sometimes it is inefficiently managed, and sometimes the farmers also complain about, and these cooperatives are also having a lot of irregularities in terms of settlement and even in terms of claim. So that's why scheduled commercial banks have the better say, and these banks were also allowed to participate in each and every activity at the later stage. This is the agriculture policy 2002 to 2000 So, if you see the pattern across states, you will find that Tamil Nadu. So, this is the bars that you have for 2012-13, 2014-15 and 2018-19. So, you will find that the Andhra Pradesh, Tamil Nadu, then UP, Rajasthan and Maharashtra, Madhya Pradesh and Karnataka, to some extent Kerala and Gujarat are the states where you have the better credit ability for the farmers, but rest of the states, for example Assam, Jharkhand, then you have here you have Odisha, then Tripura, then you have Uttarakhand, and all these states are not having that much agriculture credit disbursement. That might be because they do not have that much infrastructural support. The banking financial services have not reached to these places, and these places are also mostly from the low income areas. So, these are the regions. So, to summarize, what I would like to focus on you, that now after this we will be focusing on the agriculture marketing, but the main we would like to summarize here. So, summary is that if you trace the history of the credit or the agriculture sector development, then you will find that we have gone from the beginning just for the expansion of the food item, then we moved to horticulture, then we have also focused on the minimization of risk, and that is why we had a different insurance scheme, and now it has become one of the gigantic in terms of coverage, in terms of contributions. And then in agriculture credit also, in the beginning when farmers were dependent upon the money lenders, the role of formal institutions became important. Institutional importance were given to banks and other financial institutions. The necessary infrastructure helped the farmer to get out of those exploiting norms of money lenders, and now the share of agriculture credit has gone up quite dramatically up, and it is going upward. And though the distribution is not very uniform, it is quite heterogeneous, and it reflects on the state of these states, state of the economies of these states, and that is why there is need to further focus on. So, going ahead, we will now be focusing to agriculture marketing, and in the next session we will have the special session on agriculture agriculture marketing, what all required, and we will be also covering up the recent law on the agriculture marketing, so farms legislation that we have, and then we will end this particular sector with those dimensions. Thank you so much for your attention.